Joining me at the table right now is Dr. Hassan Mahmud, who is the Director of Monetary Policy Department at the Central Bank of Nigeria. That department works on those 2 days. I'm not saying they don't work. They work harder. I must say, they communicate. Dr. Mahmud, good to see you again. Welcome to the program. I'm trying to get out your communique. All right, let's take a look at the March MPC. What has shifted from March MPC to May? Are there any significant differences?
Yeah, indeed, very, very significant differences. One, the trend, the trajectory for GDP improved from 0.11 to 0.51 as our 5 basis point. The inflation numbers also start truncating southward now. That's a very welcoming statistics for the monetary authorities, in the sense that we've had 18, 19 months, month-to-month consecutive increase in inflation numbers, and that has been a very major concern, given that the mandate of the central bank is primarily price stability, conducive for sustainable growth. It was emphasized that while the inflation numbers are going up, the GDP numbers were going down. Now we are seeing a narrowing of that space, and that has impact on all domestic prices, including what happens in the money market, what happens in the exchange rate market. So it's given room for the monetary MPC members to now assess what are the impacts of the things that they've been doing, particularly the unconventional tools that they've been using, whether it has been impacting or supplementing the monetary policy tools at addressing the crisis on ground. So I think there are very key milestones that are achieved in terms of the trend of those key indicators.
Will you say that those milestones that were achieved between March and May, because I guess that the Monetary Authority or the Apex Bank or the MPC must have been watching market conditions between March and May, what has happened, which you've elucidated to. Do you think that the MPC with this meeting provided some degree of certainty with this meeting as regards to stagflation, which the central bank governor mentioned yesterday? Stagflation, we have unemployment rate high, inflation rate, though is trending downwards, is high, 5 basis points decline. What else again makes
exchange rate issues?
Yes, exchange rate issues and all of that. So would you say that this MPC provided a degree of certainty, even with the FX rates?
Yeah, in the MPC deliberations, there are also sections of the outlook, which the communique also specify about. And the domestic economic is assessed or appraised in line as a function of global developments, because it's a small open economy. So you have and also what you call an oil-dependent economy. So you have developments in the global economy, including monetary developments of other central banks, impacting on what you do in your domestic economy or affecting some of your key indicators. From that perspective, the MPC members looked at those global developments. Particularly, you will see that in the report, there were indications that inflation numbers is rising in advanced economies. We see that the projections for global output growth has also improved significantly or substantially, given that, one, the concerns that were had in terms of the efficacy of the vaccines that are on ground, in terms of the different variants of the COVID disease that we have, was a bit solved, in the sense that even the South African, Brazilian, whatever, the AstraZeneca and the Johnson vaccines were still seen to be 95% efficient. So the projections that economies will open up and supply side developments will improve is still sustained, and that's why the IMF reviewed the global GDP by 50 basis points to 6.0. So within those contexts, yes, there are still emerging risks in terms of these inflation numbers picking up. It comes in here as imported inflations, and as normalization also takes place in those economies, it comes in here as carry trade, capital flow reversals. So we look at, the members looked at those parameters and still sustain the optimism that improvements will persist. The only major concern that came out was the differences in terms of the inequality, in terms of the distribution of the recovery process. while advanced economies have gone over 50% in terms of the herd immunity against the COVID, and those economies by July are more or less fully opened, you still see some emerging market and developing economies having very key challenges in terms of COVID. We saw what happened in India and how that economy was more or less locked down for another 2 months. In Nigeria, our immunization or COVID vaccination level is still 1% and below.
Is the MPC worried about that?
We are worried.
The pace of vaccinations. And how worried are they? If they are worried, how do they think it will impact the recovery?
We have to look at it in the whole context, in the sense that we did not have the level of devastation or health disaster like in those advanced economies. The casualties we had, the death cases we had, the pressures on our health system relatively were different, even though there are other groups that will argue that, well, we're not doing enough testing. However, the death tolls were less controlled in terms of Nigeria in particular. However, and in the communique, the governor also mentioned that, or advised the fiscal authorities or the government, that all the non-pharmaceutical measures to address COVID must be sustained and strengthened. However, there shouldn't be any call for further lockdown of the economy because of the economic impact it has in terms of slowing businesses. And don't forget that we have also had a lot of injections, both fiscal and monetary, into the economy, which we want to permeate the economy. So when you lock down and businesses are not flowing, the people are not coming to buy the things that you are producing, then start seeing inventory builds up, prices will start impacting on prices, unemployment, and the economic activity will also impact on GDP, and you start seeing the numbers revising. So while, yes, there are optimisms or there are encouraging statistics coming out, they are still fragile. They could reverse very easily. It's just one quarter that we're seeing. We've seen 2 consecutive quarters, but you see that 0.11 to 0.51 is still, compare that to pre-COVID era when we're doing almost above 2 to 3% GDP. And they also tally that with the inflation, the population growth number. You see the gap is still very much there. So there still needs to hold on to consolidate on some of the things that have been working. The ones that are not really working very well, refine them to get optimal results or optimal outcomes. However, it is still important that we are looking at other externalities and how that will impact on the economy.
Let's talk about insecurity, which was one word that the central bank governor did mention.
Yeah.
He mentioned it a few times yesterday, and I remember I also asked a question around that, how it would impact the economy. How much of insecurity is affecting monetary policy objectives? Yeah. Especially around the food sector interventions, which you're saying. I reeled out earlier some figures, and I think those figures are going on the screen right now. Thank you guys for that. In terms of how much the CBN has disbursed for different interventions, we've seen so many, especially around food. So how much of insecurity is affecting the objectives of monetary policy, those food resultant effects from those food sector interventions? How much of insecurity is affecting that?
If you look at the main drivers of inflation, it's food prices. And even if you look at the composition of our CPI, the food proportion is close to 50%, food prices, in the basket of the CPI. So it is a key driver of inflation. While we're injecting funds in terms of the various interventions, anchor borrowers, real sector, SMEs and stuff, and production is going on, the production needs to get, or the output of that activity needs to get to end users. The security challenge comes within that transition. While even though we also had security challenge in terms of even production, we have cases of where farmers are not allowed to go to farm except they pay certain levies or certain charges and stuff like that, and the fear around whether you'll be kidnapped in your farm and stuff like that. But principally is the distribution channel, getting those things. The main consumption are in the urban areas. The productions are in the rural areas. So, and the price computation, even the urban prices build a lot into the inflation computation. So not being able to get these goods to the markets or to the end users means that the producers of those goods cannot sell them. The people that want them in the towns and the urban areas cannot have them. So because of that shrink in supply to the market, and then the excess demand that you're having from those that really want to buy. Don't forget that we're also boosting aggregate demand in terms of all the TCF and stuff. So people have resources to buy these things, and people are gainfully employed in some of these SME sectors. So that demand bucket is there. When it comes to meet this, backward trending supply side, then you start see the interplay of demand and supply, see prices going up. Even cost push, demand pull, also going up, and then so you start seeing the prices going up. So the concern of the Monetary Policy Committee was the fact that because of these security challenges, we are not able to get these items to the market, and that boosted the price. That is on the production side of the agricultural side. On the investments and other businesses side in the financial system, you also see that market confidence in terms of economic activity taking place, particularly for industrial production, manufacturing output, and stuff like that. So you see that also impacting on prices, our cost of production. So that also translates to inflation. So security is very key, but the governor also mentioned that this is within the purview of the central bank, but also mentioned that there are a lot of other engagements and collaboration between the fiscal and monetary authority to collectively address the security challenges.
You know, the upward price pressure, which we've seen over the years now for about 20 months, at about 18%, which is currently at. And we've seen that the MPC have not hiked rate, at least since the start of 2021, since it lifted, just gave us an ease of 1% from 12.5%, which the NPR was at the time last year. I think it was this in July, if I'm not mistaken. Where I'm going to actually is also what the central bank governor did say yesterday, where he gave us the formula GDP is equals to consumption plus investment. So when I took a look at it, at least ruminating around the show this morning, the consumption is also hampered a bit by insecurity, which hampers production. We must produce to be able to consume first. Then the investment part, insecurity, hampering investment, be it local or foreign investment. And for that investment definitely to come, or let me even go back to consumption a bit apart from production, there must be money in your pocket. So inflation is also eroding the purchasing power. If this continues to happen, has the CBN or has the MPC really looked at a scenario? What if this continues to permeate? Is there a way out of it?
The most impacted sector of the economy in terms of the effect of inflation is the lower income band. And that is the largest of our population. Like you mentioned, the rising inflation takes away the welfare effect in terms of your income earning or your disposable income is wiped away from that proportion of prices that changes over time. So you have the same money, but you can get lesser goods and services from it. So it is very important, and it also translates to the capability of producers to negotiate wages, because of the inflation and the disposable income shrinking. You need higher wages to meet the same level of consumption or to meet your utility preference at any particular time. So you see that wage pressure coming in, and if that wage pressure comes in, it translates to the cost of production, which will, at the end of the sales, go to the prices. So it impacts on inflation. The other side you also looked at in terms of the investment. When you did the GDP equation, the C plus I plus G, both the C and the I have government component and they have private component. So you have a C small g, C small I. So you look at while also supporting government, because the fundamental infrastructure and other things needs to be provided by the government to enable cost of production minimized, so that the sunk cost is absorbed by government, while the private, don't forget that the private sector are more for profit making, but they also need to impact on employment generating and output contribution to the output growth. So you need to also look at both sides of that, supplement in terms of these factors of production getting easy to access so that the cost of production will reduce, and also the end users, the consumers, also have that effective demand to purchase the things that are in the market. So you don't want manufacturers to start having a build-up in their inventories because, one, they could not produce, two, because they could not sell. That will also, because they need to break even, they say. So they need to get that cost imputed into their sales price. So you see that inflation impacting both sides. It also translates to the numbers we have in terms of exchange rate and how that will also translate to the demand pressures and
do you think that the market
constraints
is
we
a
have.
bit calm now, or the market is a bit satisfied with FX rates now?
Well,
because it seems now that the I and E window FX rate seems to be the official rate, which I think the CBN governor has also been saying at the time. But do you think that the market will take that solace?
If you look at the history from the fourth quarter to this 2020, the first quarter of 2021, you saw the disparity in terms of performance between the capital market and the money market. While the capital market was booming in terms of return on assets, in terms of asset prices, the money market was extremely low in terms of return on treasury bills and other transactions in the money market. But now you start seeing, while the capital market is calming and rates are still moderate, the bearishness has more or less moderated now as economic activities are taking place. The money market is also picking up. You see OBB rates and the treasury bill rates also improving, including the fixed income market. So you see that balancing effect coming up in both markets, even in terms of the deposits in the domestic economy. So you see, and those are not unrelated to, one, economic activities picking up, production is taking place, more people getting employed, particularly in the SME sectors and other private investment sectors, and also the foreign investors seeing some stability in our macroeconomic indicators. The inflows are also improving. You read in the numbers that remittances improve following the Naira for Dollar initiative. Those are also related to the country risk parameters that those investors are looking at, particularly for the foreign capital inflows and FDIs. So you see moderation and improvement in terms of market performance if you look at the key indicators of soundness of this market. But like I keep saying, the uncertainties, both endogenous, exogenous, still remain, and there's a need to also be very watchful of those emerging risks that can easily crystallize.
Now, the MPC is basically on a hold pattern until what happens? Well, what will cause you people to shift to the ground? Well,
it is clear that, one, we're coming out, or we're still in a crisis, and we're pulling out of the crisis. There are thresholds in terms of the employment level that will be reached, in terms of the level of performance of GDP growth, that you now start thinking of, okay, we are already consolidate on the domestic end in terms of the supply side. Let's start looking at other factors, exogenous factors, in terms of how do we get in more capital inflows, foreign capital inflows, to meet some of the huge infrastructural deficit and the supply deficit that we have. And that will only happen when you start seeing some very good, satisfactory performance in terms of the domestic economy. The emphasis has always been look inwards so that your policy measures or your tools that we are using are not highly volatile to changing global development. So if you look inwards, raise the resources inward, implement them inward. We're not saying you should do controls or restrictions, but however, you just reducing pressure on exchange rates, try to produce things that you need to import locally so that you don't have that pressure on the other side. Improve export so that inflows will come from export. As you're improving export, you're also creating jobs, you're also building on our reserve as those inflows come in. So it's when you start seeing those level of performance, particularly when you start seeing our GDP numbers now going above our population growth rate. So you have improved in per capita income, and then this welfare effect that you mentioned is now improving substantially. More people maybe at a particular level of employment. You can now start saying, okay, let's start moderating these, because at the end of it, it could also overheat the economy and start seeing a reverse.
So in other words, we're still in a crisis, pandemic crisis handling mode. Yeah. We're still trying to handle the crisis. We've not yet transited to the recovery.
We're recovering. If you look at minus 6.6 in the second quarter, that was the highest dip we had in terms of our GDP. Yeah. We came to minus 3.6. We're already growing at that level, but we're still in recession. Because
but in terms of the activities of the bank or the MPC, it's still like it's also trying to mitigate the crisis, because even with the CBN governor's announcement of adding 100 billion, even Naira for Dollar scheme, everything is about
Yeah.
Come, guys, let's try to, you know, mitigate this crisis to make us recover.
Yeah. Yeah, the crisis came to meet us at a weak position. So we're addressing the two problems. To come up to pre-crisis level or even
COVID.
yes, pre-2016, you know, when we went down to 2%, 1% of GDP, and then addressing the crisis which brought about the intensive interventions in terms of fiscal and monetary stimulus, which are not under normal circumstances, the central bank will not do. But that has also helped to, you know, cushion the impact of the COVID on the rest of the economy.
Finally, in 30 seconds, what should Nigerians take away from this communique? In case you are interested in reading it, you can get it on the website of the Central Bank of Nigeria. Okay, yes, I think you can get it, or even on some sites, some news sites. What should Nigerians take away? Give me two things.
Yes, one very important thing is the fact that the MPC members and the Central Bank are aware of the challenges of the economy, and they're taking every measure in a measured and systematic way to address them, particularly at its impacts on the generality of the people. While we are looking at investments and other foreign capital inflows, we're also looking at the domestic people, particularly highly vulnerable, how they are not, you know, highly marginalized in this growth trajectory that we're having. So we're looking more at inclusive and beneficial growth to the entire nation.
So we're still having a pro-growth central bank, or a pro-growth MPC.
Yes.
Thank you very much, Dr. Mahmud, for coming on the show. All right, I've been speaking with